Hello, ladies and gents. How are you? Hope you guys had a good day today. I have my handy notebook today. We're going to be going over a few things. Let's start with is there a bubble in the stock market? It could be a little inflamed, but what happens if we don't invest, right? That's the biggest questions. There's more fortunes lost from people just waiting online, waiting on the sidelines, waiting for that right moment to go in. Millions of trillions of dollars are lost just waiting and waiting and waiting. So those of you that are on the sidelines, they're waiting for that big dip. It may never come. It may come in, who knows, a year from now. What are you going to do? Just wait on the sidelines? So during these times of crisis, that's why I'm very heavily invested in the best, the top, the best, the companies that are changing the world. Um, again, Facebook, Amazon, Apple, Netflix, Google, Microsoft, Tesla. These are the companies that I'm heavily invested. There's other companies I invest, but smaller percentage of the portfolio goes in those smaller companies. I don't want to talk about that, bore you with that. But I think if you stick with these top companies, you're going to be okay. Because let's face it, these companies did better than most companies did before the pandemic. They did great during the pandemic, and I have a feeling they're going to do just as good after the pandemic. So waiting on the sidelines is not the answer. If you just keep waiting, you're going to miss that bus, and you're going to lose on making a lot of money. That's just my feeling. Of course, do your own due diligence, and make sure you feel comfortable with everything that you do. Okay, how do you measure? What's the best way to measure your success? How do you measure your stockbroker? How do you measure your money manager? How do you measure somebody who's doing management of your money, or and compare it with you? Well, it's very simple, guys. Just measure it with the indexes, right? We have three major indexes. Most people like to measure it with the S&P index. So like if you watch my other videos, the first thing you got to do, if you have a money manager, the first thing you got to do is get that portfolio performance. Look at their portfolio performance, see how they did last year, see how they did this year, see how they did last 5, 10, 20, whatever years that you've been with them. You'll see a certain number. Is it 6.5%? Is it 9%, 7%, whatever it is? And then compare that with the index, right? The S&P index is done about 9%. So if your money manager is doing below 9%, it's time to replace your money manager, because you could very easily put that money in an index fund, a low-cost index fund. Then there's a few of them like that. I don't care where you put it, as long as it's a low fund index fund that tracks the index like the S&P 500. You're going to do probably be better than your money manager. As a matter of fact, I don't know if you know, Warren Buffett bet $1 million against any money manager, and he said, if anybody can beat the index for 10 years, I'll give you $1 million. And guess who won that bet? He won the bet, because no money manager was able to beat that index fund over a 10-year period. So use the index fund as your measuring stick, your measuring tool, and see how they did. If they did good, check your 401ks, check your IRAs. You have a right to see how much they're making for you. After their fees, see how much they made. Okay, and if you don't have one of those vehicles that invest your money for you, start one. I don't care where you open it, whether it's Charles Schwab, TD Ameritrade. There's a bunch of other ones. Who cares? Robinhood, wherever you want to put your money just to get started, start there, right? Start there and start putting in. If you don't want to put all your money at once, start slow. Start buying the dips as it goes down. Pick your favorite stocks. 5, 6, 7 stocks. I told you my favorite ones. See which ones you like. Those are my favorite ones. Start there, and then as we have dips, like last week we had a dip. That was amazing time to pick up more of it. So I don't know if you guys did that, but I did pick it up every time there was a dip. I went in, but I took more shares. I went in, took more shares, and what happened today? Today it went up. Everything went up today. So start somewhere. The most important thing is to start. Okay, start doing something. Um, Next question that comes up a lot, especially with the younger crowd, is, hey, are Bitcoins real? Are Bitcoins something that's going to change the world? Is it going to be something that we can invest in? Look, Bitcoins are real. Bitcoins will change the world. Bitcoins are amazing for third world countries, developing countries that have very poor banking system, right? Even though we are okay where we are, but some of the other places in the world, Bitcoins are huge. They're big because it doesn't take much. All you need is Bitcoin. You could do transfers. You could buy stuff. You could now, I don't know if you know, you could use Bitcoins on Square, right? Square takes Bitcoins. So yeah, Bitcoins are real. But what percentage of my portfolio goes into Bitcoins? Let me tell you, even though I like it, it's still too early for me. For Bitcoins, under 1%, right? Don't put I wouldn't put more than 1% of your portfolio in Bitcoins as of today. Okay. What do you think about that? Give me some comments on that. Let's move on. Okay. Okay. What is the rule? No, rule number one for that Buffett says, right? What's rule number one? Never lose money. Okay. And during this crisis, which companies are the ones that you're gonna invest that are solid, that are big, that have big balance sheets, that have a lot of money in the bank, right? This is the first rule for Warren Buffett, the greatest investor of all times. This is his rule number one. So stick with those big companies, big balance sheets, big income, and I think you're gonna be okay. That's my take on that. Investment, guys, is 20% picking the right companies, and 80% is your psychology. Do you panic when the stock market goes down? What do you do? How do you, what are you looking at it every single second, right? So it's almost not as important as picking the right stocks as being in the right frame of mind, understanding the ups and downs, not panic selling, right? So some of you panic sold last week. No, that's not what we do. When it goes down, we buy more. We don't panic sell. So that's what I need to say about that. And I think that's about it for today. Yeah, that's all the questions. So in summary, start somewhere, use your measuring tool, which is your index funds. You could use the S&P 500 index fund to measure your money manager's performance. You could use that to measure your own portfolio. My initial goal when I started investing on my own, when I fired my money manager, was to beat him by 100%, and I achieved that through index funds. Once I did that, as I learned more and more about it, I was able to double what the index funds were doing, right? So those are your measuring tools, guys. Use the measuring tools, beat those index funds, and if you're not sure how to do it, education. Learn, read, look at those balance sheets, look at those P&Ls. It's very easy. It's a lot easier than you think. And I want to leave you with that. Shoot those comments, subscribe, like, and share. And I'll talk to you tomorrow. Thank you.